welcome everybody to the open bar. Where would you rather be on a Tuesday morning at 9:30 than the open bar here with me? Welcome everyone. We are getting close to year end. Christmas really comes fast. What's up, risky business? And everyone's been waiting for this year end rally, Santa Claus rally. I think we moved nicely off of the lows from last month, but giving some back out here. And particularly, I think, in the stocks that most people own and own the most of. So you'll always hear about a little corrective wave when it's led by the Nasdaq 100, right? Hey, Jonathan. So how is everybody feeling? Speculative growth got hit pretty good yesterday. Rough day for my trading account because we were making the bet there was going to be a big catch up rally there. And I think you still can make that bet. I think certain things were broken tactically, but could still end up being big shakes. We'll talk about some of them. We'll go through some of them. What's up, Billy? Inverted rally. Yeah, oil was another one yesterday. Right, got whacked pretty good. Let's just throw up the cockpit and talk about it. The market opens here in 2 minutes. And this is pretty much how I'll start my day. So I'll go through my news feed, my market data forum, and kind of see what the headlines of the day are, right? Look at the upgrades and downgrades, the pre-market movers, yada yada yada, overnight markets, and see what's kind of happening. And then I'm going to go right here when the bell hits at 9:30, and of course the first half hour we all know. I would say even 60 to 75 minutes of the day can be extra volatile, right? And you typically want to wait for that move to settle itself out, right? But then you want to start reading the tape and seeing what's going on. And really in that first half hour as well, because you can catch some big moves, oftentimes in both directions. So I'll go here and I'll check out with the 1 day rate of change from a sector basis. Okay, what's happening? What's happened? Great. And then, if I'm doing a review, not tape reading, I'll sort something like this by the weekly rate of change and just see who are the near term leaders. Right. So that's been financials in a big way. You see here up 4.5%. Basic materials doing pretty well as well. My indexes are on an equal weight basis, right? But I could easily say, okay, I want to check out materials. I could throw up XLB and then I'll get all the components of XLB right here on the right hand side of my chart. Right. And then I could easily sort by, I want to look at the big boys first. Let's all sort by market cap, which is more or less going to be in line with the weightings for these funds. And then I'll go on down the line, right? I'll look at all the charts and then assess the internal health of that group or of that index or of that, industry group sector. So Lind looks like a failed top. We all know Newmont's doing great. Sherwin-Williams, probably not a top. Ecolabs. Freeport looks better than anything in the material space. This is one that we're doing well on right now. Air Products, APD, the Corteva. That looks good, huh? Corteva. I bought some Archer Daniels Midland yesterday. Vulcan, big materials conglomerate. Nucor, that's steel. All these charts look pretty good, right? Martin Marietta, wow. Don't call it a breakout. Look at that. Really nice chart, nice coil. So there's some good stuff going on in materials. But that's how I'll kind of start my day and see what's going on. So we just had the bell. There we go. And defensive tape, right? So the first thing I would think when I look at something like this, you could see the intraday performance here in the first column that I'm sorting by, right? Led by consumer staples, utilities, a little bit of materials, right? And then you go on down to the bottom of the leaderboard, and you got technology, energy, industrials. So for now, that's a defensive tape. Okay, great. Nothing quite like hitting the bar at 9:30 a.m. on a Tuesday. You got to do it. It's the holidays. You could put a little, whiskey in your coffee. It's Christmas time. Steven says, I want a bear market. I don't know. And I think that's the wrong way to think. These folks who are like, "Oh, I want a financial crisis or a market crash because then I could buy at lower prices." Probably not. Um, Probably not. I don't know. Maybe I think I'm like a financial crisis baby in a way, where I was pretty close. Um, Definitely in proximity, but in a number of ways to the crash growing up. I was in college, really, when it happened, and then I was out of college starting my career in the aftermath, and it took a while. When I was walking to my first job, I remember through the financial district, I used to have to walk through the what were they? The protests, Occupy Wall Street, I think they called it. Yeah, but I don't. I would never wish for a market crash, and that's the main reason why was seeing the financial crisis, and it just really sucked, like across the board for everybody. Um, I don't think you want to bet on crashes. Like, we're happy people. We want to bet on we want bull markets, right? We want to bet on higher prices. We want to bet on secular uptrends, um, extended bull markets, right? Like maybe the one we're in now. Yeah, I don't like rooting for the Bears, but I am ready for a bear market too. I joke all the time. I talk to Patrick and other friends, trader friends. I say, man, this has been a good cycle, but exhausting. Exhausting. I play more golf in bear markets, so that's always good. Where is my ripper into year end? I'm saying the same thing, James. I'll tell you where it is. It's in industrials, right? It's in financials. Those have been the rippers. I mean, these two groups have been so good. We're gonna dive in. JC may have infected me. He says that sometimes. Yeah. And I yell at him. I say, why would you say that? You sound like a miserable man rooting for bear markets and pain. Mm. But look, like Julia is saying, corrective waves, right? Within primary uptrends or within broader uptrends, really good stuff, right? You want to buy dips in bull markets, right? So corrections in longer term uptrends, we do want because that's where the biggest gains are made. What about the Bears? I'm trying to stay interested in football this year, but as a Giants fan, it has been hard. It has been hard. So, guys, I thought we would just run through the Nasdaq 100 on today's show, and I'm going to tell you why. I'm going to flip screens here just a little bit. Okay. All right. So the Nasdaq 100. Why? Here are the cues. Let's clean it up and do it together. Here we go. All right. Erase everything. So what do we have here? If the chart looks noisy, my apologies. Let me dust it up a little here. Get rid of the Bollinger Bands, and we're going to leave the rest. Actually, we're going to leave the rest. I'm going to tell you why. Get rid of that indicator. We don't need volume. We're going to leave the RSI 14. Red line is the 20-day moving average. Gray line is the 50-day moving average. And then the blue, real solid line here is the 200. That's the more important one. And what I'll do here is I'll fade my indicators out based on their importance, right? But I do want to see all three. I do want to see all three. Sometimes you get a really nice signal when the moving averages converge. Here, something like this, and then they're led by the short term, right? That's kind of like, I hate crossover signals, but when I see something like this, you get all three clustering and then given the same signal together, that can be pretty powerful. So I do like to look at all three. I've always looked at all three. I was always a too many indicator guy. So you kind of still see that if you look through my TC 2000. All right. Why do I care so much about the NASDAQ 100 right now? I think there are a number of things going on, but the biggest theme right now, it's really a value over growth theme. So if you look at the Russell 2000, we're going to just clean all these up. Okay. You have this major breakout, flip it to a weekly, right? Just to see that breakout. Beautiful. Going for it. You have the Dow Jones Industrial Average, same thing. Just going for it. Major breakout. These are more value oriented indexes the Dow and the Russell 2000. Then you have something like, well, let's look at large cap growth. This is IWF. And I could draw this like a scary looking potential top, right? So this is what the world of growth looks like. Here's large cap tech, XLK, right? A lower low and a lower high for now. Okay. Here's the Nasdaq 100. We're just really sloppy since September. We've talked about this. Market's been messy. Breakouts aren't sticking. That was mainly a growth problem. So I think you have to separate the two for now. There's been some healthy market rotation. However, I think it's mission critical that we don't lose the biggest and best stocks in this bull market. The Nasdaq 100, that's leadership in an index, right? So I think it's key that Nasdaq tech stocks hold certain levels out here if we're making the bet that the Russell 2000, the Dow, financials, industrials, right, the stronger groups and indexes are going to stick these landings, stick these breakouts, and enjoy some reaction legs higher. And I think the cutest thing that you could do right now in this market for people who are feeling bearish, the cutest thing you could do is start betting on failed breakouts. I'm not going to, but something like this, right? There you go. You have a level. And then you're making the bet on a catch down move from the stronger groups or indexes. I think that's the cutest thing. If you really wanted to add some bear exposure here, puts in something like the Russell 2000 against those pivot highs from October. Let's call it like 250-ish. You could do things like that. I'm not. I'm not. I am instead focused on the Nasdaq 100 big cap tech stocks, and let's talk about why. Let's tighten this up because I want more chart. I want more chart here. So I have a watch list of the Nasdaq 100, and I could pull up anything that I want. Okay, we could do the Dow. In the future, you guys can come and request an index or an ETF or even an industry group or thematic, right? And we could pull it up from the watch list engine here and just chart through it. So today, I think we'll do the NASDAQ 100. And let's talk first about why that is. You have a mega level coming in right around here. Okay. So I'm dropping the VWAP here. This is a daily chart from the pivot lows in November. Comes in, I don't know, 617, 618. And then I'll drop another VWAP from the pivot highs. Okay. We're now below these key levels. And then if you zoom in a little bit and say, well, Fibonacci people, if you look at a Fibonacci retracement of the advance off of the November lows, we came right down to the 38% retracement, and now we're breaking below it. So like this whole area right here is critically important. 610, 620, right? We're either above it or below it, and then I think you do get a directional move. And if something like the NASDAQ 100 settles down below this key confluence of interest, right? This really, really critical area of interest here, then I think we're going back in, to the 580s. We're going to retest those lows from November, and then eventually we'll be talking about, is this some sort of multi-month top here? Right? We'll be drawing this pattern like this. So let's dive in, see what's going on there. Look, it's the same kind of situation for large cap tech, XLK. There's the VWAP from the pivot lows trying to hold today, and this is just what you're seeing from the weaker indexes. Communications, you could do something similar. Internet stocks, there you go, right? Sitting right there at that key VWAP. Software, right there, below that key VWAP for now. That would be an interesting top to have completed in this environment. And then, of course, semiconductors. Again, maybe the best example of this confluence of interest. So this is what I want on all of my charts right now, right? A zone drawn with the VWAP from the pivot highs from October and the VWAP from the pivot lows in November kind of converging here and creating some sort of polarity zone that I'm paying attention to. So that's why we're marking up all of these. All right, back to the NASDAQ. Let's see. So are we going to dig in, rip it higher? Look, if the Qs are back in the 620s in a day or two, I you got to get behind it. And I think you want to buy stocks like Palantir and Nvidia and Meta and Google into year end. If we're below, I don't know. I think, you know, there's a heightened likelihood that the leadership groups, the industrials, the financials, the banks, the biotechs, all the stuff that has been working catches down, catches lower to these growth indexes. All right. So when I'm looking through an index, I'll either sort by market cap, but in this case, like I want to look at the strongest ones first. And if I was looking for trade ideas, I would go short-term momentum, right? I would do like the 5-day rate of change here and look through those, right? So that would bring up stocks like Lulu, right? Just gapped higher. Regeneron, biotech's been really good. Marriott looks fantastic. I was looking at Marriott and all the hotel stocks yesterday. So let's do that. Let's do that. Let's use the 5-day rate of change because the Nasdaq 100 has had, 3 rough sessions now. Yeah, lower again today. Right. So let's do a short-term rate of change and see what stocks have held up best, but then also just go through the whole list here. Okay. Lululemon, top stock of the past week. I like this. I like this a lot. You can see the short-term moving averages curling higher beneath price, and you got the 200-day overhead. You just zoom out to where the selling pressure really started this summer. I mean, Lululemon down more than 50% from the June highs, and drop a VWAP there. You can see the buyers taking control here of the short-term and intermediate-term trend. Then when you zoom out on a chart like Lulu, so let's flip it to a weekly, you have this massive top that already completed, executed lower, right? You had big reaction leg to the downside. And now we're coming out of it. So I think this is a reversal worth paying attention to. And we can get back above that 200-day moving average, then the primary trend really starts to shift back in favor of the bulls. I like Lululemon. I do. Regeneron, it's the right pond to be fishing in. Biotech looks fantastic. This is one of the big boys. And you could draw this in a number of different ways. But now you have all moving averages, curled higher, sloped higher, in sequence 20, 50, 200, momentum in a bullish regime. You could pick your spots and get long a stock like this. I think that's the right kind of name for this market. Marriott, let's just zoom right out because I know we have a big level of interest here. And all the hotel stocks have these big polarity zones that they're running into right now. I think you had a breakout here. And then, I mean, this is all the confirmation you need, right? So if we're above 305 in Marriott, that's a stock you want to own. Look at the bullish momentum regime. Really nice. Notice how, we are now 4 stocks into the NASDAQ 100. We haven't really done any tech, right? So the leaders are not the usual suspects anymore. Lind just talked about it when we were going through the materials components, right? This is the biggest material stock. LIN, if we're above 412, I like it long. I like it long. Materials are looking good. That's probably not a top. Boring stock, though. This is probably the best looking one of all of them. So here it is, Tesla, everyone. You don't need to make this much more complicated than it is, right? That's the story with Tesla right now. Major breakout. Huge. Going to the 5, 6, 7, maybe 800s in Tesla. This is currently the best looking Mag 7 stock. Haven't been able to say that in a long time. Old Dominion, probably not a top. Could draw it in a couple different ways, but really for me, a pattern like this, it's all about getting that VWAP back, and we are. Right? You could draw some stupid lines here. Right? Not a top. Great. Old Dominion. Zoom in, look at it on the daily. Right? If we're back above this VWAP, that's a good one. It's a good one, and I do like the short-term momentum. Rivian looks better than anything to me in the NASDAQ 100. Look at this base, just a killer base, right? Coming out of it in a big way. That's how you want to see a stock resolve a primary trend reversal. If I had nice arcs, I would draw a beautiful little arc right here. But that's a rounding bottom, and it's completing to the upside above all the moving averages here. If you drop some VWAPs, that's the last line of resistance, right? So that's a VWAP from the IPO highs. That comes in the low 20s. Probably where we're headed. Booking Holdings, vacate or travel booking platform, do the same thing, right? Are we back above the VWAP from all-time highs? Yeah. BKNG. This is a stock nobody really talks about. Looks good. Airbnb looks fantastic too. I want to see big momentum coming out of here. We're making new multi-month highs, right? The highest level since July in Airbnb. But the truth about Airbnb is that it's been really bad since coming public. Has not been a stock that you want to own. I'm a long-term believer in this business. I think Airbnb is going nowhere. We're going to be booking Airbnbs 20, 30, 40 years from now. So it is a stock that I want to own. I'm just looking for that moment in time and that level where the trend reverses. Look at how sloppy it's been since IPOing back in late 2020. I think once we get back above, and you can see all the VWAPs littered on my chart, but notice how they all come in the same zone, right? So if buyers can really take control of this trend, we'll know because we'll be back in the upper 130s, 140s in Airbnb. And I will definitely own the stock for the long term. Fastenal, nice little gap fill opportunity. Probably needs a little time to chop around here, digest this move over the past couple of weeks. But I do like the way that the moving averages are flattening out all in the same little area here in the lower 40s. And if we fill this gap, I mean, that's a nice little trading opportunity, 10% higher, fills that gap towards 47. Starbucks, nice tactical base. This has been a bad stock for several years now, right? Massive range here. Really, Starbucks has been rangeless since 2019. Could draw a massive coil here, but I think for Starbucks, you want to zoom in, draw a little tactical base here. So I do think that this is a beat up stock that's worth owning back above like 87.50 in Starbucks. But again, just notice how we're going through the Nasdaq 100 and there's no tech stocks. Right? So these are your leaders now. What does that say? Pepsi, again, another little tactical reversal. I like Pepsi, like Philip Morris, we were talking about on the morning show today. Comcast, hard to own. Massive top, right? Potential for a massive failed top, though, if we're back in the 30s. So maybe a lot going on in the media industry right now. You do have a little tactical reversal here. Comcast is back in the 30s. I do think it starts to get interesting. Where are all the tech stocks? Ross Stores looks really good on a weekly. Vertex, right? We just talked about Regeneron. Probably one of the stronger stocks over longer time frames in this index, Vertex Pharmaceuticals. Not a top. Time to buy this was probably a couple months ago, but Vertex is heading higher. Warner Bros, just something I'm staying away from. Right, I stay away from the M&A stuff, especially in that industry. PACCAR, PCAR. This is farm and heavy construction equipment. Big range here, 2-year range here. All right, breaking trend a little bit. Looks like PACCAR's going higher. It's a good looking name. Honeywell. No, so boring. Massive range, still trapped below those 2021 highs. Nothing to do there. Amgen. Notice all the biotechs. Three nasty candles here a couple weeks ago. So really need to be back above that view up from this little consolidation phase that recently resolved lower. If and when that happens, you zoom out, you look at it on a weekly, and then you got a big breakout level here around 340. Adobe. One of my favorites. I have been buying Adobe, accumulating, building a big position for the long term, in the long term account, doing it with common stock. But look, let's clean this up. There's a lot of work to be done here, but this is how good things start. This is how good things start, and this is a good company. One of the kings of software, breaking a little bit of trend here, back above the short and intermediate term moving averages. I think we get, fresh multi-month highs here very soon. And then you got the 200-day moving average looming above. So you might chop here for a while, and that's okay. When you zoom out on something like Adobe, I mean, look at this massive distribution formation. It probably isn't. It probably is not that. As long as we're holding the current levels, and it looks like this is a tactical reversal, which I mean, I love the scoop and score, right? Bears tried to take it down late November, and then just surged higher. Another good earnings report, rewarded for it. Looks like we're getting a leg up. I think Adobe's probably in the 400 soon. Cognizant, looking better, looking better. But again, tech stocks that are below their 21, 22 highs, like this one, that's a massive level that needs to be cleared and taken out. Right? You want to be in the long-term leaders. Cintas, probably not a top, right? I mean, how many patterns have we drawn like this in the less techy Nasdaq 100 components? A lot of non-tops here. I think these are some of the best opportunities in the Nasdaq 100 right now. Hopefully soon we're talking more about tech stocks for an index like this. I'm not even going to talk about Kraft Heinz. CSX Railroad. You might get a nice multi-year base breakout here. Transports are working. Speaking of boring stocks, CSX above 38, looking good. Charter, no thank you. This is one of those weird Coca-Cola bottling companies. Just move along here. Monster looks good. Monster looks good. People are talking about the staple stocks out here. Monster is a secular leader in that space. Hard to find a better, consumer staple stock in my career than Monster Beverage. I can't drink that stuff though. Analog Devices, huge breakout. Look at these 2 weekly candles. Boom, boom, into a high and tight one here in ADI. I think that's a bull flag worth buying. I was also looking at, well, we'll save it. Yeah, there are some coils in semiconductors right now that I'm paying attention to. Gilead is just slow and sloppy. You think you're buying a biotech, you're getting something juicy, you're going to get a big mover, and then you're like, this stock moves like Johnson and Johnson. But Gilead, if we're above 122, looking good. And when you zoom out, I mean, it's hard not to like this, right? So this is one of the bigger bases in healthcare, at least one of the bigger bases that's completing now. Big level right there. PayPal, terrible. It's been really bad. And it's not looking better, right? This is a little, bear flag or bearish continuation pattern. I could draw some diagonals on this, but boy, if this breaks back towards 50, what is going on at PayPal? Paychecks. Another one that I could draw like as a massive top. But really at least for now over the short term, trying to reverse trend. I would stay away from that one. NXP Semiconductors. Not bad. Not bad. Again, those 2021 highs, you want to be above that level. But right here, I think you got something that's definitely a polarity zone. Right. And we're right at it. So I think, for trading opportunity in NXPI, if we clear the shelf of resistance right here in the lower 230s, this one's got more than 20% in the tank. It's probably running back towards 300. MongoDB, people are talking about these stocks again. Another example of below the 2021 highs, right? I'm a lot more interested in some of these tech charts when they're making new cycle highs. MongoDB, not one of them. Axon Enterprises, this is the old Taser. Really messy and in, frankly, too wide of a range, right? We're chopping around in a range right now, with lower bounds around 500 and the upper bounds 800 or 900. Really sloppy, but it's been a good stock for a long time. AstraZeneca, this is the kind of stuff that's working in this market. Zoom out and just look at a weekly. Good looking stuff. GE Healthcare, messy, big range. I like Qualcomm. It's one of those examples of those prior cycle highs coming into play right here. And then when you zoom in, because that's the weekly, then when you zoom in, really clean base right here. We're at that breakout level right now. I think Qualcomm could be at 200 fast. We're long. ADP, no. This is a good one. This is one of those semiconductor names I was just talking about. Weird looking situation here. I would draw it something like that. Definitely have a level there. If you drop a VWAP here, you're going to be above it. Drop a VWAP here, you're going to be close to it. Nice. So if we're above 70 in the microchip, I think we're heading back towards 100. Copart, no, Nasty downtrend. Mondelez, you do have a big level coming into play here. The year-to-date lows, and then when you zoom out, I mean, this is one of those tops. Staple stocks have been looking better. These confectioners. Michael Noss was on the morning show today, brought a chart of Hershey's. So yeah, you dig in here, play this against these lows, 54-ish. Maybe there's a trade there. Verisk, another one. I mean, look at how many of these stocks have just been crushed in the Nasdaq. 30+% drawdown. Constellation looks great, coiled up, ready to go, sitting right at its highs from late last year. I like this, right? If we're above the pivot high VWAP, and Constellation looks fantastic. O'Reilly, it's okay, right? Sitting here on the 200-day moving average. Maybe a good spot for a long-term buy, but you want to do it on strength. Palantir, I think they chase stocks like Palantir, Nvidia, some of the Mag 7s at least into year end, right? Maybe it's starting here today, but Palantir's got 200 written all over it. EA, that's an M&A situation. Keurig, yeah, man, absolutely crushed. Look at that. People buy staple stocks and say, oh, they're going to be safe. These are quality businesses. Pay me a dividend. Down 20% almost in a couple days. I don't know. Dr. Pepper. KLA Corp, this is one of the big semi-equipment stocks. Looks fantastic. You look at something like this on a weekly. LRCX, similar situation, but this has been the stronger one, the strongest one in that space for a long time. Keep riding it. IDEX Laboratories looks a lot better than Zoetis. I'm big on like the pet health, right, which is what this is. So IDXX, if we're above those prior cycle highs all day, 695, 700, we're there right now. We're there right now. This one just had a nice earnings reaction, some post earnings follow through, and now it's just checking back, I think. Exelon. There are utilities in the Nasdaq 100. Yeah. Look, if we're below the 2021 highs, we're just going to move on. Intuit really coiled up. Let's look at it on a weekly, right? Because this stock's been as good as anything, right? So I'm zooming out to show that. Wow. Now, for the past 5 years, we've kind of been stuck in this consolidation phase, but we're at a really key level. We're coiled up. We're coming off of a little, corrective wave here. Call it, I don't know, we're sitting in the 15% drawdown at a big breakout level at the prior cycle highs. Zoom in to a daily. Momentum was oversold, right? Now we're carving out this nice little base. You got the VWAP. Let's move this up to the all-time high. You got the VWAP coming in right here around 680, just at those pivot highs. I think that's a good buy point in the Intuit. And this is a really quality company, big growth company, industry leader that I think is worth owning for the long term. It's always on my list to add to. So I think you got a really nice level there around 680. I think that gets you 800, and the stock's going to continue to be good over longer time frames. AEP, another utility name, looks better than some of its peers that we've looked at. Lam Research just talked about it, right? This is a KLA competitor. Again, all-time highs, looks as good as anything in this market. These have been really some of the best, steadiest tech stocks this cycle. DoorDash, never use it. I'm a big Uber guy, but look at this. Look at this massive level. 21 highs, early 22 highs. And we blasted through and failed that breakout this summer, right, into October, boom. And then a big drawdown, 35% drawdown, right? And now we're starting to fill that gap. Boom. So back above 250 in DoorDash, those old highs, I think you got to own it. You got to own it. Aren't they like doing stuff with Lyft? I don't know. Looking a lot better than Uber. Messi, another big top. God, Team, the trade desk, some of these old software stocks not looking good. I really like. I like it for this, right? These are some of the best patterns. Bull flag, bull pennant, whatever, right? But basically, what makes this pattern what it is the big advance, right? You just see a big up leg, so this is a momentum stock. This is a momentum name, right? The buyers are behind it, and then just something high and tight because Big moves like that have to be digested, right? Little chop, and then you lean in the direction of the underlying trend, higher off of those November lows, and you use a little VWAP to get you in, right? We can zoom in here. I want to make sure that we're at the highs. Boom. So we'll zoom into an intraday. That VWAP comes in right around 55.50, and I think you could get confirmation at the pivot highs here. So do it like that, just below 57. That's it. That breakout's in the book. So flip it back to the daily. Okay, you want to do something like this on strength, and then where do we go? One way to determine a price target for a short-term trade and a short-term continuation pattern or coil like this is, okay, what was the up leg coming into the pattern? 27%. You could do it based on points too. So we went from 45 to 55, $10. Right. So call it 25% or $10. $10 gets you to about 65, which is about 25 or 20% move. And 25, 27% move gets you to about 70. Right. That's probably where we're going. And when you zoom out on the chart, there's a lot of space to go higher. I think on could be a double over longer time frames back towards those old highs of 100. Another utility, this is Excel Energy. Who knew there were so many utilities in the Nasdaq 100? Right, so big level here around 75. Texas Instruments, I think I got one on my desk. Love those old calculators, but it's been a bad stock. It's been a boring stock and an otherwise really happening industry group, right? Laggard in semiconductor. CDW, another one of these payroll processing names. Business services. Nasty top, looking like a nasty top. We're below 150, 155. No, thank you. And then, like, what do you do for something like that? If you want a short pattern like this, well, then you got to go find the pivot lows, drop a VWAP, and look for a level like something like CDW already below the VWAP from the COVID lows. So you could go all the way back to the IPO of this stock and drop a VWAP. There you go. Right? That better be a level of interest to the downside. DXCM, speaking of big tops, they're everywhere in this index right now. What does that mean for the NASDAQ? Now, it's really about the biggest ones, right? Because the NASDAQ is so top heavy. It's really about what the Mag 7 is doing. That's what the index is going to do. But you do have these big tops. Another multi year top. This is medical devices stock. I don't know, 61. If we're below there, it doesn't look good. And then you get confirmation at any one of these pivot lows here, right? Meta. These are the ones that can't be tops. Meta, Microsoft, all the big Mag 7 names can't be tops. I think that's very important. When you look at a daily, though, Meta it's improving. But you do have this big sloppy range here between these VWAP zones, right? 650 to 700. You could drop another one here at the pivot lows. It's going to show you the same thing. So this little cluster here, we got to get out of it. And that could take a while. That could take weeks to months. Intuitive Surgical has been a good one, right? Big gap higher on earnings back in October, but you still have this level from earlier in the year, late last year, around 600. Once we're above there, I mean, zoom out on this chart. Intuitive Surgical has been good as anything in healthcare. Apple are now the Mag 7 leaders catching lower, right? To some of those laggards, right? Is stuff like Google and Apple now catching down to the weaker ones? That wouldn't be good, right? But Apple, you could just draw a basic polarity zone here at the highs from late last year. So if you get downside, that's probably where it's headed, a couple percent lower. But a stock like Apple probably stabilizes pretty quickly. I don't think you're going to get much action there. Apple probably continues to be a good place for this market. Synopsys, SNPS, is that another massive top or potential top, right? It looks like a big distribution formation. Another software name, another big top in T-Mobile. Just think about what we're saying as we go through these charts. Cisco looks as good as anything. Zoom out on the Cisco. Wow, look at that. And we're back. Cisco's probably going to 100. Take Two, makers of Grand Theft Auto and other great childhood memories. Take Two above those prior cycle highs. If you want to look for a place to enter a leader like this, VWAP from the pivot highs. Okay, you're right there. Right, you're right there. Take Two looks great. Fortinet, memory gap situation. Little volume pocket right there. Probably gets filled. We figure out this little consolidation zone here. If we're above 87 in the Fortinet, I think you're going to 97. It's tradable. But again, Looks like a big distribution formation in another software stock. Autodesk below the prior cycle highs, just nasty since late last year. Amazon at least above the prior cycle highs, but came off the April lows, tried to break out, and then you got really what ended up being a pretty nasty failed breakout. Right? We would circle it like this and go, oops, boom. AMAT looks good. I think you just want to play it off of those 2024 highs, 250-ish. Again, semiconductor equipment, really strong. ASML, you got a big level here. Let's keep this one in the thousands. This is big for the bulls. This is big for the story, right? ASML. Workday, another one of these payroll companies, big old top, multi-year top, right? If we're breaking down below these pivot lows here, 205, 210, I think you got another 30, 40% of downside back towards the bear market lows. Biogen, yeah, these are the ones I like. Okay. Tactical base, above all the moving averages. It's just, a matter of where do you get in? How do we pick this spot? I think you use the VWAP from the pivot high, strength above there. Biogen probably has a lot left in the tank. Google, speaking of the Mag 7s, right? I think it's big if Google could dig in, rally back to some new highs here. This has been the Mag 7 leader. Don't want to lose it. You don't want to start looking like some of the other Mag 7s, like God forbid Netflix, just nasty. Netflix is not a Mag 7, right? But where's the floor for this? Netflix needs to stop the bleeding. Baker Hughes, oil and gas, and the Nasdaq 100. Oil and gas really hit hard since late last week, I would say. Big down day yesterday. This one actually holding up better than most. Microsoft, this can't be a top. I think this is critically important. Shook lower yesterday, again today. Trying to turn green on the day, basically unchanged here. But Microsoft's got to get back to 500 fast, if you ask me, and undo this little double top situation. Costco, even Costco completing tops out here. I'm telling you, the more I look through and just listen to myself, a lot of this pattern, too much of that pattern in the NASDAQ 100 right now. Palo Alto, slow and steady, higher highs, higher lows, higher highs. A little bit boring. Look at it on a weekly, it's more of a consolidation though. Rising wedge. NVIDIA, I think this is an easy target for some year-end flow. Right? NVIDIA digs in here at these lows from late November, shoots higher. You're getting 5% fast back to 185. And if that zone gets cleared, you're going back to new highs. So I think there's 20% in NVIDIA into early next year. Cadence, this better not be another big top. No, but it's a big level. Big level there. Those old highs, 320, 325-ish. Another way to look at something like this is this VWAP from the pivot lows coming into play, right? We're right there. Want to see that hold. Got a cluster of the moving averages. Big level here. Fang, loved this one, and now I hate it. Right, we came out of this sweet little coil. I mean, this thing was so coiled up. Look, exploded higher. Boom, boom, boom. And then just failed nasty at this big VWAP level from the all-time highs. Right? Shot right up there. That was the target. Boom. So we were taking profits at least, but really came undone, this one. Zscaler, big top. Where's the floor, right? Seeing a lot of this in tech right now. This one doesn't look good. Marvell, yeah, big level at the prior cycle highs. Steadily making higher highs and higher lows, right? So trending up. Drop some VWAPs here. That's probably a big level around 83. Want to see it dig in, head higher again. CoStar, this one's been really ugly. Speaking of big tops, right? Can you see it? Oof, it's real estate. CrowdStrike, got a big trend line here that's been in place off the 2022 lows, testing it again. But dips tend to get bought in this name time and time again, right? So CrowdStrike pulling back towards that trend line support. Got the 200-day moving average. This one's probably going to be okay. You do have a level here. Lines up with the pivot lows around 475. Mercado Libre, Latin America softening, to say the least. And for this one, I don't think you want to own it below these prior cycle highs. If we're above that 2000 level, big breakout, best stock in Latin America. If we're below, look, you could draw this in a couple of different scary ways, right? Breaking trend at a key level. Don't love to see that. So I think you definitely want to see Melly back in, towards 2000. AMD, big breakout. This is one of those massive dot-com bubble bases. This is it. This is the zone that's got to hold. We gapped up on, I think that was the Chat GPT news back in October. Zoomed higher, retested, tried to bounce, retesting again. We're back below 200. That's not good for AMD. If we hold 200, I mean, we're heading back towards 300. So big level here. Micron too. This is one of the best bases, dot-com bubble bases. Look at that. Boom. So we broke out. Targets are being hit up about 150% since breaking out of that dot-com bubble base, or at least doing it in a sustained manner earlier this year. Global Foundries, no thanks. Yeah, no. The Pindodo. China's under pressure, right? So this is the PDD, but this is a China story right now. So cutting the new lows, lowest level since July, not good. Baba, Baidu, they're all under pressure. Intel, you had this nice base, right? We zoomed higher out of it. This was the trade in Intel. You got the coil here at the upper bounds. Boom, automatic reaction, 64% in a couple months. Now we're just kind of chopping around here, right? Chopping around, probably gearing up for another leg higher eventually. App, this has been one of the strongest stocks in the Nasdaq 100 since it was added. I think at this point you want to buy this one on a breakout. So you have those highs from late September, early October. They come in right here around 730. That's it. You could also drop a VWAP from the pivot highs here. Put it there. You could put it there. That's really it. Buying this one on strength. Datadog, trying to dig in at the 200-day moving average, but this one has been absolutely crushed over the past month, down 30%. So we'll see. But again, one of those stocks, one of those old software leaders below the prior cycle highs. Still. Trade Desk, maybe the nastiest top of them all. Quite possibly, yeah, the biggest multi-year top of all these software names. But there's just too many of them. That's the state of software right now. If we learned anything, looking through the Nasdaq 100 names, we got 3 left. It was just software. Yikes. Been ugly and not getting better. MicroStrategy, for now, hanging on, still in the Nasdaq 100. Congrats to MicroStrategy for making it through the latest round, I guess, but ugh, doesn't look good. Back to where we were, the first half of 2024, this big cluster of price action. When you zoom in, I think these pivot lows need to hold, or who knows how low this one goes. ARM Holdings, why are they killing the critically important semiconductor stocks right now? Right, this AI trade continues to be under big pressure. Look at that. Speaking of tops, right? So if ARM is below 120-ish, probably going back towards 80. And last but not least is Broadcom, big level. They hated the great earnings report from last week, and Avago, Broadcom, has to hold this 330 level here, I think. Otherwise, you want to start dropping VWAPs. This would be the VWAP from the April low, probably heading there. So 10, 14, 15% lower, and then potentially down towards 260, which would be a 20% drawdown, bring you back around these pivot highs from earlier in the year. But with the way that some of these AI stocks have really been under pressure, you can't rule something like that out. I think you do want to be looking down to support levels, not up to resistance zones. So how was that, guys? We just went through every stock in the Nasdaq 100 one by one. We talk about on the morning show all the time how we're looking at so many charts and how it's so important to look under the hood and count up trends or count down trends. Or in this case, we ended up counting tops today, right? But people say to me, "You can't look at that many charts that fast." I think on the morning show the other day, I said, "It'll take us 20 minutes, whatever." Took our time a little bit, but let's do that in the future. If you guys are interested in a group or an index or some sort of a fund, pull it up. We'll run through all the components and we'll do this little exercise because this is fun for me and this is what I'm doing here anyway. I would just be doing it by myself. Rachel loved it. They love the charts. Cool. Thanks. Thanks, guys. Morgan Housel. Shout out Morgan Housel. All right, awesome. I'm not even going to try to check up on the chat because there's probably a lot in here. For now, question from Richard about the Mag 7. Yeah, they keep losing momentum, and for now, you just got to look at these downside levels. And I think you could buy the ones that are stabilizing and look good, right? You could buy the leaders, but something like Broadcom, right? You don't want to buy into a situation like this because there's no floor in sight still, right? They've been selling this thing for the last 3 days. Let it find its footing, let the dust settle, and then at the same time, we went through probably some of the ugliest looking charts in the market, at least in the large cap world today. But you can go and do a lot of other better things with your money right now, like look for some opportunities in some of the leadership groups like industrials, healthcare, financials, right? There's probably better things to do there. However, I'll say right now, we're going to hop off in just a second, but we're 45 minutes into today's session, and I don't love the way that they're selling some of these leadership groups. For now, it looks more like a situation where the leaders, the stronger indexes, like we talked about, things like small caps, the Russell 2000, are catching lower to some of these laggards like tech, right, and the Nasdaq 100 that we just went through. Um, so something to watch. And again, like I said, we talked about the importance of this current level in the Nasdaq 100, which we're below right now. Bears seem to be taking control. This is another big one in the Russell 2000, right? You want this breakout to stick. So we'll have to start dropping VWAPs here and looking and saying, okay, well, Russell's heading back towards his VWAP support. Does it dig in? Do we finally stick the landing? But, I don't think it's a good thing that for now, this breakout appears to be failing. And there's another bigger failed breakout level when you zoom out on the weekly, right, which will come into play a couple points lower here. You really don't want to see 245 go. Really don't want to see 245 go. All right. That's it for today. Sounded so bearish. I just went through every chart one at a time, right? Got to count them. This is how, by the way, that's how you analyze market internals, what we just did. Not the percentage of stocks above some sort of moving average or the percentage of stocks at new highs or any one of these breadth thrusts, right? No, you just look at all the charts. That's the number one way to do it. Sure, there's a lot of shortcuts and people like to use these aggregate breadth indicators and different thrust indicators. That's great. But just look at the charts. Look at the charts. Doesn't take very long, right? You all now know how quickly we can do this. And we'll do more on next week's episode. So thank you all for joining me. Happy Tuesday. Stay safe out there through this little short-term volatility. I think the bulls eventually show back up and we do get some upside into year end. But we got to see it. For now, we got to see it. For now, we got to see things stabilize, dig in, and start moving in the right direction here, right? Okay. Thanks, everybody. Hope you enjoyed the open bar.